All right, good morning. It's 7 o'clock on Wall Street. Time to get your global macro on. Welcome to QuantBox Live, where we're going to uncover the best fundamental opportunities across global markets. Hey, also at Investor Bootcamp, today is Tuesday, so we review all the economic reports. So I did a test yesterday on several of these reports, and I had reports written about the reports, summaries written by the reports. And if you want to take a look at how artificial intelligence gauges things like the PCE report that came out recently, the way I broke it down is to give you a little, right, some bullet points and then explain the implications of this data against monetary policy. And then I put in challenging factors because you may notice right at the beginning it summarized but also scored it. Okay, summary of PCE April 2024. Okay, score neutral. And then it challenges it. What things could have made it a higher number or a lower number? Gives you a little overview of the government agency. It's supposed to give a link to one of the charts, but it doesn't do a very good job of that, so on and so forth. And then it links you to the actual report, the one that I read to you. Isn't that neat? So I was thinking maybe that could be posted either on QuantBox or TRADARS or somewhere. But if you want to take a look, and if you have any feedback, like, does it make sense to you? Should we add more? But it literally reads the report for you. Okay. So I went in there and looked at personal income increase. Personal income increase. Personal income rose by 0.3 or 65 billion in April. This increase was primarily due to higher compensation income from assets, which is your investment accounts, and government social benefits. Right? Personal income increase, a steady increase in personal income can signal economic growth, potentially leading to a neutral or slightly hawkish monetary policy to avoid overheating in the economy. So it explains what an increase in personal income is, because that was the first bullet point. So what happened and the implication of that? I don't know. That's how I designed it anyway. So if you have thoughts, you let me know. Neat, right? So, anyways, today at Investor Bootcamp in the swing trading room, I will go through all of last week's reports. Yeah, cool. Yeah. All right. So, anyways, so look, yesterday was another interesting day. Up, down, turn around. So, we will drill in and see if we have a new underlying intrinsic trend or not, or if we're just in volatility. And remember, was it last week or maybe it was Sunday? We lost our long-term intrinsic trend, and it's been risk on for a bit. We lost that Sunday evening, and which means we're directionless. The ship is just floating around at sea without a rudder. And we knew that Sunday night, and since then we've had lots of volatility, but you've had these days where you're down 2% in the morning, and by the time day closes, you've been up 2%. And you're like, wow. So, anywho, we saw that one coming. All right. So, anyways, yeah. So we're going to spend time looking at the real time sentiment charts. Now, the ultimate goal here is to organize. Okay. We want to look right? Here's our organized thought process, but then we have to line it up to what's actually happening today. And the scatter plot has been just that, a scatter, which is risk. You can actually now see risk. You can see opportunity. Thank you, QuantBox. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. I had a question today about or it was last night, about, hey man, you mentioned something about the market open emails. That okay. This is what the emails look like. There's also one for the commitment of traders report and all that kind of stuff. And so, like, this is pre-London, and it shows without you even logging into QuantBox that Kiwi dollar got more bullish. The DAX got more bullish. Euro Aussie, Kiwi yen, CAD yen, they went all more bullish pre-London. Nice, right? You see how quick that is? USD CAD went more bearish. Oil went more bearish. USD Swiss franc more bearish. USD Rand more bearish. And then pre-New York, which was an hour ago, okay, Kiwi dollar is just reminding you, Kiwi dollar more bullish. Euro Swissy more bearish. Nice. And somebody's like, so I'm not getting those. Well, I'll double check. But the way that you do that is you sign up right here. Sign up right here. Okay. And we send it to some things we text to your phone number. The most important things we text to your phone number. The other things like the COT report is just emailed to you. Nice. So that's how you do that. Okay. Cool. All right. So let's get on with it. So by the way, like that email that I just showed you, that's probably where you would start today. You'd go to your charts. It's just like, hey, here's the things you should probably consider today. Okay. And the interesting thing about that, because I don't know, honestly, I don't know what other services do, right? There's a lot of alert services out there. I don't like even the idea of an alert service, but there's a lot of them out there. Do any of them just focus on fundamentals? Like that little update, like, hey, Jim, did you see like Kiwi dollar, went more bullish? But it's based on macroeconomics. Like, does anybody do that? You're like, dude, everybody does that. Really? Okay, I don't know. So, but I think that's cool, right? Again, I geek out on this stuff. I think that's cool. Like, it's all economics. You're like, really? Yeah. So, anyways, check this out. Continued risk on attitude by options traders. 2 days in a row now. Isn't that neat? Come on, seriously, that's neat, isn't it? I mean, it's at least relatively pretty. I know I was supposed to pull this in and I haven't had time, but it's kind of quick and easy, right? Look at that, a 0.89. Okay. When you're below one, it's risk on. Okay. Risk on. Why? Because they feel good, right? Right. Like, have you seen all the elections around the world recently? They talk to people like, how are you going to vote? I'm going to vote the same way I voted for the last 30 years. And then the results are completely different, right? Like, I don't like surveys. How do you feel? I feel really good. No. How are you investing your money? And options traders are risk on. Now, the money market is also risk on. Look at this dramatic change that happened. The process started before. Yesterday was the the first real day of going to risk on. This is the second day of risk on. But look what happened. Whoa! The last 2 days have been monster bull rallies in the treasury market. Monster bull days. Look at that. This is good, by the way. You're like, what do you mean bull? Well, to get yield down, and this was almost 4.6. So it dropped to 4.4 in 2 days is huge. So what's happening? People are like, oh my God, the Fed's going to cut. So what do? You buy a treasury that's going to pay you the highest yield you'll ever see for the next 10 years. So some people a day or two ago bought a bunch of 10-year T notes that paid 4.6. A year from now, the new ones are going to pay 3.6. So which one's more valuable? The asset that pays you 4.6 every year or 3.6 every year? Well, of course, the one that pays you 4.6. So people are like, "Oh my God, the Fed's going to cut." Boom. So they buy these treasuries. And that's good. And we saw this over here on the 2-year. This is the money market. This is hot money. Short term. Short term money. And this is much longer term, and this is the stuff that impacts your mortgage payment. This is the thing that impacts your credit card rates. Okay? Longer term. Cool. Neat. So, right, risk on and risk on. In the last 2 days, this was massively risk on. Now, oil crushed. Yeah. Gold not doing much of anything, but it says down, but it seems like a couple of days ago we were well below where we are now. So there was an up and then a pullback. That might be an interesting move. S&P 500 hanging in there. It doesn't look like much happened, right? But it was like riding a rodeo bull. Nothing happened for 8 seconds. I got on, I got off. What's the big deal? Uh-huh. Yeah, but it's been a bucking bronco. Okay. Euro dollar back to where we've been, and Bitcoin kind of flat. Okay. Things that are bullish, euro dollar. But remember, not long ago it was 14. Gold, yields. Okay. Over here, USD Swiss franc, pound Swissy, Kiwi Swissy, Aussie Swissy, CAD Swissy. I'll leave it to you to figure out. What do I do? All right. Let's analyze the underlying intrinsic trend. Back to risk on ever so slightly. Okay. Why? Okay. Yields have come down. Yesterday and the day before, massive days for the 10-year. So that went back to risk on. Okay. Gold is up a little bit. I score that negatively. You can score it positively. It depends if you believe that's aggregate demand or inflation hedge. It's a point of view. S&P 500 hanging on to positive gains for the month. Well, that's good. Dollar is weak. That's good. Yen is weak. That's good. And VIX pretty much flat for month over month. Rolling 30 days. It's not June versus May. This is rolling 30 days. So, yeah, all right. That's not bad. It's not bad. So there's definitely some risk on here. Not a lot. Okay. Okay. So you got that burned. It's 30 days. So it's not really month over month. It's over the last month, over the last 30 days. So you can simply look at this and say you're a moderate bull. That's it. You're done. On the shorter run, nothing's happened yet today, and this week is we're going nowhere, and we've seen that. Remember, this isn't a guess; it's measuring all of this stuff. And we knew going into this week that choppiness was extremely likely, and that was our biggest risk, and that's what's happened. Yesterday in the stock market, it opened hot, it went up, then it flipped, dropped, right? Reversed all its gains, went through the range, made a lower low, then stopped, reversed, went back to the range, went through the range, went up through the range, went back to the old high, went above the higher high, and then stopped, turned around, and went all the way back to where we began the day. And that's danger zone. So this is what the S&P 500 looked like yesterday. We were in a technical range, and it opened hot, and then it went down, and then it went up, and then it closed here. So nothing happened. QuantBox saw that coming. Now, again, how does it do it? It's actually genius if you think about it. How does it do it? It talks to 1, 2, 3, 4, 5, 6 different constituencies and does a survey of how they're applying their investment strategies. They're blind samples, if you will. Like they're not really these traders are in different rooms. They're not talking to each other. So you're getting right. It's like the police separating the criminals, the criminal gang, right? You interview everybody individually. All right, you're facing 30 years. Who did it? Where's the money? Right? So, anyways, we're separating these investors and we're asking them how are they applying their strategies. And then we come together as a group and we're like, this is mixed. These guys are trading against each other and they don't know it. There's no trend. Caution, caution, caution. Okay. And again, this is risk on. This is risk on. This is good. Stock market under these conditions, typically you would expect to go up. So for example, S&P 500. You just move it there. Oh yeah, this would be bullish for the S&P 500. You see how that works? It's very, very, very simple. There's not like complicated math. Okay. But if you're just like, I don't know, I don't know, how does that impact oil? It just shows money's coming out, right? But anyways, it's good. It's good. Doesn't mean oil will go up. It's just, well, this is what it's suggesting for market conditions. Cool. Okay, now. Okay. The first step of this process is you need to analyze it in a way that you need to find a shape to this pattern. If much of it looks like it's going this way, like the way they're clumped, there's a lot of stuff in the lower right or lower left and lots of stuff in the upper right. That's risk on. If instead you look at it and you see a lot of stuff, it looks like the shape is this way, then that's risk off. Unexpected, unexpected. And when it just looks like it's a giant circle, and this is again like being subjective, it looks like there's a lot of circle with a little bit of this for me. A little bit, but not much. So I would interpret this like there's a lot of things that are not working out here, but there are quite a bit of things that are. So it's somewhere in there. I would say it's neutral to slightly risk on. Okay. And then you can try to find like patterns for particular like currencies. What's the pattern? Aussie yen down, CAD yen down, pound yen down, Kiwi yen down, Euro yen down, Swissy yen down, Aussie yen down. Or sorry, no, that's yen. All right. So what do you think? Is yen strong today? Yeah. And not expected. Because these things have QuantBox scores these anywhere from 2 to 10. So there might be a buy a dip scenario in euro yen today. That's how you should look at that. The farther right and the farther down, the more unexpected. So you could open your euro yen chart and see, did it pull back to support? Maybe, right, Jim? Maybe. The biggest intervention is the market taking profit. We were clearly back to the intervention point. There's no doubt, right? Yeah. Good time to take profit, don't you stink? Yeah. So was it the central bank or just the market taking profit? I don't know. What's the difference? Down is down, right? Down is down. Yeah. So, anyways, pound Swissy, Kiwi Swissy, CAD Swissy, Aussie Swissy, Euro Swissy. Now, check this out. QuantBox expected all of this. These are all eights, negative eights, and negative nines, right? -7, -8, -9. This is right as rain. So if you're following QuantBox and you're literally going to these charts and typing in the scores like I've asked you to, then you would have seen this coming and you would have spotted the trades and you would have taken them. It's hard though. I would suspect that most of you still do what you used to do. You have QuantBox, you're like, yeah, it's nice, and you like going through the webinars, but it's very hard to break old habits and create new ones, right? And if you're actually using QuantBox the way I've asked you to, you would have seen all these coming. You would have set these trades up. You would have been able to take the shorts. It would have been obvious technically, and you probably would have made money. Because look at the cluster. I mean, it's expected for crying out loud, right? So make sure you break the old habits and create new positive ones. Okay. Is anybody here actually going and plotting these scores on their chart? So you go to pound Swissy and you type in QB equal -9. And then tomorrow you log in, oh, it's a -8. So you go in and QB equal -8. So now you know it's bearish, but slightly less. And it's a way to keep engaged. Okay. Well, the thing with bullish and very bullish is it tells you generally, right? Now, if it works for you, it works for you. I'm not here to criticize that. But I think if you type in the actual score, well, then you have to update it every day because it could stay very bullish for a month and a half, right? But isn't it interesting going through the morning process, the routine, the regiment? You go in and you got to go through all these charts, but you're not even looking at the charts for trades. You're updating the QuantBox score. And you're like, oh, look at that. Pound Swissy went from a -8 to a -9. Now I'm even more bearish. Or the other way, you're like, huh, I wonder if it's swinging back around the other way. And then you analyze it from the chart. And you're like, oh, yeah, that makes sense technically. Right? Yeah. but it's also, to me, it's the regiment. I always give the example of Ernest Shackleton when the Endurance got trapped in the ice. How do you keep all the men alive? Freak out. No. Randomness. No. Do what we did last time. Well, I don't think you were trapped in the ice last time, right? So, anyways, so the regiment to me, th- that works for some, let's say, that process to see the number change, but also you have to do it every day, right? And the other reason I recommend it is that's how I've started trading. So if I'm your mentor and coach, you're like, at least you have to understand where I come from. And where I come from is I looked at everything quantitatively first before I even opened a chart. And then I looked at the chart from the point of view of the quantitative analysis. So then I look at it, and if pound Swissy is becoming more bearish, I'm like, then I look at the chart going, oh, well, that makes sense. Look at the chart. The chart is showing, some extreme bearishness. And so having that process versus just looking at a chart. Byrne says, I still, it's difficult to translate info. Okay, let's just solve that right now. Okay, Byrne? All right. So the most important thing for you, Byrne, okay? Oh, well, okay, good. Byrne has a great example. Byrne says, gold is bullish all the time, but my chart shows me down. Yeah, this doesn't analyze your chart. Who cares about your chart? Doesn't matter. This does not analyze. If you need that, you use TRADARS. It does wonderful technical analysis. So, burned, gold could fall $500. But if inflation is higher than GDP, then one logical assumption is you hedge inflation by buying gold. Okay. No, but this isn't about entry. Okay. This is not tactical. Okay. It's a way to organize your thoughts. Gold, okay, based on institutional investors, seasonality, GDP, inflation, jobs, and interest rates, is bullish. Now, QuantBox tells you right away, but not the chart. You should look at that right away. It's very bullish. Not currently, not in the moment, but logically it is. So you can chase price as it falls, or you then look at this and say, okay, I'm very bullish on gold, but not yet. But this is actually this spot here. Let me highlight it, make sure we can all see it in the recording. Okay. This is a massive opportunity. That's actually what you're looking for. This is extremely bullish, but price is falling. Cool. So now do some technical analysis, Burned. Okay. So to me, what you need to do is break this into digestible pieces, and it becomes very easy. This is bullish. Okay. Done. You're a bull, Burned. That's it. Easy. Okay. But we know the price is falling, so there's no bullish trend. Okay, so whatever, that might be an opportunity. But then you go to a chart, and let's see, I think I have my charts open. Let me show you how easy trading is. How easy. All right. No, I want this one. All right, cool. All right, so you're a bull. Great. Is this bullish? No. Done. It's no confusion. Burned. Okay, let me get rid of this. In fact, let's just clean this up as simple as we possibly can. I will go to FX Bootcamp Simple. Okay. Is that bullish? No. Done. Easy, burned. Easy. So tell me, when does this become bullish? I can pick a different time frame if you want. Is that bullish? Nope. So let's say I'm analyzing the 4-hour chart. I'm going to make a strategic decision on the 4-hour chart. So, burned, when the 21, oops, I had the wrong color here. When the 21 becomes or rises above the 55, I will buy it because I'm a bull. And until that happens, I won't buy it because the market's not bullish, or the current market conditions are not bullish. That's it. You can do this, Burn. That's easy. Okay. Trading should be that straightforward. Remember, the first thing that QuantBox is going to do is organize your trading process so it's not messy. It'll read like a storybook. Okay. Under these economic conditions, gold should be bullish. Therefore, you buy in market conditions that are bullish, and it all lines up. And it'll get rid of all the junky, loser, mediocre trades stuck in the middle. So when market conditions are unclear, you're going to trade a lot less, burned. But when the underlying intrinsic trend shows up across the board, not only will you trade a reasonable amount, maybe you'll trade more than when market conditions are bad, but it won't like put you in a quadruple your trades, right? And it'll never do that. But what it'll do is when trading conditions are good and we'll be able to see it, the underlying intrinsic trend, then you'll let your winners run. So you're going to have less stupid trades or less mediocre trades, but when things are good, you're going to have a fair amount of trades, but you're also going to let them run. You're going to do much better. Was that helpful, everybody? Just I'm happy to review that over and over and over and over and over and over again. The other way you could do this, Burned, is mix it with TRADARS. Okay. And at some point, you're looking at gold and you're waiting for bullish trade plans. And TRADARS it's agnostic to trend. It's agnostic to macro. It doesn't care. It's just looking for patterns. And so you're the one that's bullish. So is this bullish? No. Is this bullish? No. Is this bullish? No. Is this bullish? Maybe. Is this bullish? Yep. Is this bullish? Yep. Okay. And you just use TRADARS to say you're going to watch gold for hours, days, weeks, if necessary. And if TRADARS starts throwing down technical trends, remember, they exist. It's happening. And you're like, oh, that's my signal. Game on. Yeah. So you just wait till it's bullish. That's all it is. Okay. But the meat, right? The meat and the potatoes here, right? Right. The meat and potatoes here is most amateur retail traders, by most, I mean all of them, right? They don't have a bias. They don't do macroeconomics. They don't do comparative analysis of these economies around the world and capital flows. They don't have 20 years of seasonal data. They just don't have anything except price and time. So don't be impatient. Okay. You're learning how to trade much more institutionally. So let's get back. Yeah, we got to look at the calendar. Okay. Tonight. Oh. Yeah. GDP out of Australia. Jolts today. And I showed this to you earlier. Let me just skip and come back. You're like, right? Jolts. Okay. The median average, 8,790,000 jobs. I think I screwed this one up though, didn't I? Yeah, I did something. I screwed something up and messed up the Zoom. Sorry about that. So, anyways, you should be able to zoom in there. I don't know what I did. I suspect I know what I did, but nonetheless, this is coming out today. The average is 8.79, and we're forecast to be 8.68. So we recently crossed below the average over the period, going back 5 years. I think I did this. 5 years of JOLTS data. You're welcome. Okay. And the last one, we came out 8.49, significantly less than expected. And you can see we're below the average. And we were way up here. It's coming down, coming down. This is normalizing. You can also see pre COVID, we were at about 7.5 million. And we're still above 8.5 million. So we're getting closer. And as this normalizes, it suggests wages will fall. Oh, we track that too. You like how I add the averages and stuff? I'm so proud of me. Good boy I am. Yeah, that was cool. So anyway, so if job openings are falling, okay, then wages are likely to fall. And we're trying to track future inflation, right? So it's all happening. This is pretty stuff, isn't it? Yeah. Me. All right. So let's go back to that calendar. Sorry for jumping around. Okay, so anyways, there's our jolt 8.37. Okay, we just looked at this. We had that number, and we know that's below the average over the last 5 years, the 5 year average. But that's good. We're trying to get that down to improve because think of it this way: when there was 11 million jobs and only 2 million people looking for jobs, then the people looking for jobs can demand higher wages because they have like 5 or 6 job offers. So they're like, oh, I don't know, I'll go to the one that pays me the most, right? Makes sense. So if that comes back down to 7.5, which is much closer to normal, but even the pre-COVID, we had a pretty good economy. So, we if this comes down, wages come down. If wages comes down, well, things like PCE and personal income and personal expenditures, they start coming down, and then inflation comes down on the CPI. See how that's all connected? This is why we look at PCE. This is why the Fed looks at PCE, because they break it down. How much money are you making? Is it more than before or less? And then how much money are you spending? Is it more or is it less? And that comes from wages. And wages come from the competition of jobs available. And so we track all this stuff. I know, right? It's awesome. Isn't this awesome stuff? Now, going back to yesterday's news, this was bad. Yeah, we kind of guessed, but that's contraction, aka manufacturing recession. Okay. So people are not buying cars, for example. This is the Fed policy working. Okay. Paying 12% on a car loan? Forget that. Okay. So people aren't buying. And if they're not buying, you don't need to make it. Inventories are up, manufacturing's down. So, anyways, cool. Tomorrow, service side. We're a service economy, and this improved. Okay. I like, or we're expected to be in expansionary territory. Okay. Tomorrow we have a CAD interest rate decision, and we have another dumb prediction early in the morning. So that's a neat little scalping opportunity. Mhm. Cool. Anyways, do we need any of this? Mhm. So that email I got, it showed that USD Rand is becoming more bearish. May not be ready, but something might be setting up. And that's interesting too, right? So that's again a way to use QuantBox to look forward. So I go to exotics. Okay. And it's saying, maybe something will develop from this. So how would you use your technicals? Okay. If it rolled over at a 618, you can take a shot like that. Yeah, like that. So now you're like, okay, today you might have some form of this. QuantBox is still neutral. Okay. But did you notice it? Did you notice it go to a smaller score? And you're like, of course not. We're not very good at this. You don't remember what it was yesterday. But I look at my report and it went from, yeah. So, anyways, anywho, yeah. So, anyways, some pretty cool stuff being added. I noticed this isn't working properly right there. So, just FYI. Okay. So, we had a change in direction here. QuantBox responded fairly quickly. Be interesting if after this pullback, if it's pulled back enough, I guess is what we're doing here. Okay. It's bearish, but not really enough to sell it. But it could be setting up. I I don't know why these numbers are, someone's been messing with this. This zero line shouldn't be up here, so these are a little too high. No, I'll see if I can fix that. I think I can do that myself. But nonetheless, it's somewhat bearish. And so if this turns around, you want to catch another move like this, right? Where it becomes from this is bullish and then neutral, 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 and then here definitely, right? So we'll see if it'll roll over and become bearish again. This is a high yielder. You never want to buy it because the cost of carrying this on your balance sheet is very expensive. But on the flip side, if you sell this asset, you pick up huge interest rates. You pick up huge yield. Let me double check a couple of things. They say they've been working, but I can't find where they've been working. So in theory, our new layout's going to be like similar to this, we'll say. And then when you scroll down, we'll have a text summary like we used to. We're just changing some of the words. And okay. And so under COT data, you would have Bitcoin and dollar and then retail, right? So you'd have something there. But again, like there's mistakes here. Okay, GDP, yeah, and it's down, yep, that's bearish, yep. But you can see the impact didn't flip and the change didn't flip. So if it went, the change should be negative and the impact should be negative, right? So for some reason that's not working. So oh my God. Well, we'll get her working. And the other thing they're working on, and it shows a layer of complexity. Flipping through all of these will get easier. Okay, the user experience is improving. So we have a pretty big change that's being developed in the background that will happen soon, I'm told, to make flipping will be better, right? Yeah, version 6. So this is happening. Like I've had 7 meetings regarding this so far. So anyways, it's happening, but yeah, it should be all right, right? It should be all right. I think this is kind of a neat thing where you just kind of organize your thoughts this way. Okay. But when you look at this seasonally, this is bullish. This market is bullish. Bitcoin is bullish. Okay. And it is projected to rise. Nice, right? It's a process. Yeah. Well, I don't think QuantBox will ever like stop being developed, right? So, yeah. So my goal is to. There's a couple of things if you want to know. Continued focused on simplicity and both visually, but also in the back end. If and that would be called efficiency. But also the bigger vision that I have is that the flow of us going through our daily routine, this kind of thing, I would like this to be not just a process, but almost like a storybook. It should because the users of QuantBox are not economists, right? And so like I could give you a Bloomberg terminal for $2,000 a month, but most people wouldn't know what to do with it. So it's like, okay, well, there's 2 ways I can go here. I could do what probably everyone else would do, if they had this type of technology, and they would just jam it full of more crap because it can do anything you want. So let's do everything. Um, but I'd like to take it to the next stage and to translate this very complex economic data into a storyboard. Now, that's easier said than done. So it would take, somehow I have to come up with a vision to say, to answer the question, well, what does that look like? And how does that work? I'm like, I don't know. I don't know. But it's a genius idea. I'm done. You guys go figure it out, right? Here's some money. Go figure it out, right? So, anyways, but unfortunately, and I think you guys probably know this, you can't give a bunch of programmers a bucket of money and say, go figure out how to make this visually appealing and easy to understand. That ain't going to happen. Um, right? Yeah. You can't ask a donkey to be a thoroughbred at the Kentucky Derby. You're like, it looks like a horse. So, anyways, all right. Yeah, an engineer's book on fashion. Yeah. So it's like, but this is the stuff I think about. Okay. This is the stuff I think about. So I find that a little bit exciting, actually. Like, how do you do that? I don't know. So me or us, we'll have to figure that out. And the best thing to do is have you ask questions. You're like burned, like, I don't understand this. I don't understand that. Okay, well, let's talk about it. And then it gives me ideas to simplify. And, you know, I think one of the pages that does this well is this one, because we're quantifying. Now imagine I'm building this right now for the Fed. And we're going to, like, imagine you had a list of Fed speakers right here, all the members of the FOMC and the Board of Governors. So what is that? 15, 16 people? Whatever. So imagine we had all those personalities and then we quantify their sentiment. Wait, what? Yes. We we track their feelings numerically. And we can say, and then we take all of that and then track how the board sentiment is changing over time. Are they becoming more hawkish? Are they becoming more dovish? Where is this board? Where is the committee? And once again, all day, every day, you see these guys on TV, these guys and gals giving their opinions of what they think. And I don't give a damn. Oh, I think the Fed's going to do this, or we're positioned to do that. I don't care. I care about what the Fed thinks and how their opinions are changing based on their interpretation of market conditions. And I want to do it quantitatively. Okay. Is that right, Bernd? Bernd, I like QuantBox. I think QuantBox is sexy. Is that right, Bernd? All right. Yeah, I'm not arguing with you. There's also, there's limitations, like the reason QuantBox looks the way it does is this is the visual tool that it's built on. So, like, this risk gauge is not like something that I've invented. This is Looker Studio, which used to be called Data Studio, which is simply Google's visual cloud tool. And so there's a table sitting on a server somewhere, and by table, just think spreadsheet, with all this data. And then you can say, highlight this data, and then display it. And then it gives you all these visual choices. and you're like, display it as a gauge, and then you can change kind of like the numeric order or the numerics of the gauge, and what areas green and what areas red, or what colors those are, but it'll just give you a gauge. And then you can go to another one and like, give me a table, and then another one, make this scatter plot, but you just have to have the data. So the way it looks is the way it looks based on the tool, right? So that's the other sort of limitation. It looks like it looks because that's how it is. What do you mean by the right side up? It bugs you that the red's on top and green's on the bottom. Yeah, I guess I could, but the reason is, and anything above one is negative, and everything below one is positive. But you're like, just invert it. But that's just how it goes. The put call ratio, right? Now, okay, so Burns says, well, compared to like Season X, but that's built on a different platform. Yeah, but that is what it is. Yeah, I know them, and that's seasonal only, right? Um, what QuantBox does is got to be at least. Yeah, no, I'm with you, Bernd. Yeah. What QuantBox does is got to be 1,000 times more complicated than Season X, right? You're like, you want Season X, right? All right, this is Season X. Well, it's put minus call. So the call's on the bottom. Yeah, but down is up. I know. I guess I could, but that's not traditionally how it's played, right? Yeah, 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 yeah. So, anyways, and you're like, so this isn't sexy, but like, this is this the way it looks is a function of the Google tools. Yes. No, no, you're right, Bernd. I'm listening. I'm not arguing. I well, in this case, I'm explaining like the way this visually looks is a function of the Google tools that we're using. And at least I don't think you can just go in and like change it. Now, I could grab this table. So somewhere there's a table that has this data. And I made this accumulative, but I can change it and not make it accumulative. And then you'd get this, and then I can change this from lines to bars. And then I created these standard deviations and the average. So you can see this is a buying point, this is a selling point, and all this kind of stuff. And then this one, I'm like, I want to see the shape, and I can change the colors of the bars. And there's a lot I can do, but mm, but you know, other than that, yeah, I just can't, because that's the tool. That's just the tool. Now, I've looked at other technology, and I might even have meetings in the next day or two with different technologies that would have similar limitations. Like, I could rebuild this and it would look different, but there's only because it's their tool and they have different visual themes, but then and I can adjust those themes, but I couldn't get it to look like that. Right now, I'm stuck with that limitation. Right. Right. All right. Yeah. So yeah. So like the week. What week are we? You're right. I might be able to change that. But here's what I do. Okay. It's not the end of the world. You can get around this problem. You go to the internet, you go to a Google session, and you go week of the year. Okay. That's it. And it's week 23. What did that take me? 8 seconds. So we're week 23. Yeah, it sucks, but it's not going to hold me back from making a good investment decision, right? But I might be able to change that, but it's difficult because we're getting it from a data set, and the data set might not have it the actual week. The like what would it say? June, I guess the Sunday date of June or something, right? Yeah, yeah. Yeah. So, anyways, lots of cool things are happening. Lots of cool things are happening. Things are going to get nicer. Thank you for the feedback. And I'm not arguing with Bernd. I'm agreeing. And I'm also, could I flip this off? Well, like I said, I wrote this risk off sentiment, risk on sentiment. So if we're in the green, it's all good. Same thing. This is yields falling, which means people are buying the money market. People are funding the country. People are funding the country. And they're doing it on more favorable terms. That's good for the country. And that leads to some risk on. So, anyways, I will see you later today. I'm sure it's Tuesday. So I will see you for the market open over at Forex.today, the YouTube channel. And then at 4 p.m. At Investor Boot Camp in the swing trading room, we will be reading the reports over last week. And I haven't done them all, but I have AI summaries for you, so we can read them, we can discuss them. You'll have the video for it, but you could also have little summaries, so you can go back through it as well, which is really cool. So the world is becoming a better place. How do you feel about that? Yeah. And you mix the QuantBox with TRADARS, and I am 100% convinced your trading's going to improve. So, like Bernd's question is, hey man, so gold is tanking, but QuantBox says bull. Yeah. So you sit and you wait. Now, sit and wait for what is the next question? Oh, well, you have to open your charts and do technical analysis. Well, I don't know how to do technical analysis. Right? I don't know how to spot a higher high, higher low. Well, TRADARS does. Okay. And that's when you use the, because remember, the machines theoretically don't make mistakes, right? So you sit around and you wait until TRADARS spots bullish patterns. Remember, it's not guessing, it sees the pattern. And you're like, oh, bullish patterns are forming on gold. And I'm a bull. I've been waiting weeks. Good. Game on, son. Get on, right? Go to your gold chart. Get ready. Set up an ambush. Let's go. And that excites me. Peace on earth. May the pips be with you. May your profits be above average. And don't forget summer school. Summer school. Summer school. Summer school. I must have it up somewhere. Yeah, I have it here. Summer school. Sign up. Okay. Scalping summer camp. Huh? Summer camp for scalpers. By scalpers, I mean developing confidence and pulling the trigger. That's a big, important skill. You might have an amazing strategy, but if you don't have the strength to get out of bed and do what needs to get done because you're shy, huh? It's like looking at the Saturn V rocket that sent people to the moon. You understand how big this thing is? It's an amazing engineering feat that they did a long time ago in the 60s. Imagine we had engineers that were capable but lazy. You'd be speaking Russian right now. So they saved the free world. So for you to have the capability of developing strategy, but you don't have the strength to pull the trigger, is the same thing. You're going to wind up communist working in a salt camp in Siberia. And you're like, I wish I wasn't so lazy. Yeah, well, you had a chance to save the world. Right? So the same thing. So QuantBox gives you clarity, but you still have to know how to get the job done, be at the right place at the right time, and pull the trigger and manage the risk. Okay. So that's what TRADARS is about, because that's the feedback I got from quite a few people. They're like, I know how to trade, I just don't do it. Well, let's fix you. Okay. So, anyways, that's what it's about. Make sure you're in. This was for you. There's a lot of heavy lifting going on because this is what you asked for. So get signed up. It starts, we're close. Not, oh my God. 6 days, not even a week. Okay. On what days is it? Where does it say it? You will trade the London New, it says it twice. Asian London, right? Anyways, oh yeah, he's broken it down into anyways, 3 times a day for a month. What days? Every day. Oh, what? Yeah. When I say we're going to break you down and build you up strong, I'm the $1 million man, right? Yeah, yeah. You're going to have to hit a bucket of balls every day until you develop the strength to do it again, right? And do it again and do it again until you have the strength. Do it again, Burn. Hit another one, Burn. Pull the trigger, Burn. Pull the trigger. Okay. Over and 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 over, and track them and track them and track them and track them. You're going to learn how to become your own coach. Track them and track them and track them. And at the end of it, you're like, dude, I made over 1 million trades in summer school. Well, one thing for sure is you won't be afraid. Okay. It'll be a mix of Ryan and I. Yeah. 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 So, yeah. Oh, yeah. 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 So, yeah, we will get rid of that problem. You see, summer school won't solve all your problems, but when you pull the trigger, you're confident. Okay. Okay. You have to have that confidence. Just imagine you were filming a movie about snipers. There's the one that is not sure of himself. And then there's the one that's confident, like, give me this shot. I got this. Get out of the way. This is mine, right? That's how you want your sniper to be, like, I'm going to do it. Have you ever seen, what is it? The Saving Private Ryan, right? I got this one, boys. He's in the rain and he's adjusting the scope, and his hands are so cold he can barely turn the scope to get it all set up. And he's like, I know where he is. That's where I'd be if it were me. I got this one. I got the shot. I won't miss. Right? That's what your snipers. I need you to be that confident where you know your strategy, you know technical analysis, and you walk into this like, okay, I don't know if I'm going to make money, but I got this trade. This trade's going down the right way. And then you drop a stop because the markets might betray you, but you got the shot. And you have to have that level of confidence. Again, you don't know what the markets are going to do, but you're confident in your capability of doing what you want to do. So you have to do it like, yeah, multiple times a day. Yeah, it's going to be tough. Okay. And if you can't be there for the sessions, watch the recordings and go through it. Right. So, anyways, killer. Okay. It's a killer school, killer summer school 2024. So, anyways, peace on earth. May the pips be with you. May your profits be above average. And I'll give you that link. Some of you, I think most of you are already in, but I'll give it to you in case you're not. Okay. I'll see you soon. Cheers. Yay.